Swayam Prabha. Digital India. Educated India.
Hello learners, I welcome you back to our series of lecture in the course of Introduction to FinTech. We have already discussed the meaning of FinTech, the drivers and challenges we have for FinTech. We've also discussed the various technologies which are used to enable FinTech. We also understood that what are digital payments and what are the various types of digital payments. In today's lecture, I welcome you to understand the evolution and growth of digital payments in India. I am Dr. Aparna Samudra from RTM Nagpur University, Nagpur, and together we will be understanding this evolution and growth of digital payments in India. The objective of today's lecture is to explore the evolution of digital payments in India. Thereafter, we'll understand that the factors which are responsible or which are behind the growth of acceptance or adoption of digital payments in India. And also we'll understand the role of NPCI, which is the body behind giving the whole ecosystem of digital payments in India. Before starting, let us have a quick look at the key milestones in India's digital payment evolution. This timeline explains that how from 1981 till 2022, what have been the major milestones in the development of digital payments in India. So we start with 1981 when Central Bank of India and Andhra Bank issued credit cards. Thereafter, in 1987, the first ATM was installed in India and it was HSBC which did that in Mumbai. In 2003, BillDesk was launched. BillDesk started as a payment aggregator for merchants, so as to ensure online payments of bills particularly. Then we also saw the upcoming of Oxygen Wallet, which was the first e-wallet. In 2005, another very important milestone for transfer of electronic funds was done through NEFT, NEFT as we know. In 2010, another faster mode of transferring payment through net banking and online banking was launched, which was known as IMPS. 2012 saw the RuPay card scheme coming up, which was developed by NPCI. 2013 was Bharat Bill Pay System, BBPS as we also know, which was again founded by NPCI. 2016, UPI was launched by RBI Governor Raghuram Rajan. 2021 saw the introduction of e-rupee, and then CBDC, which is Central Bank Digital Currency, at pilot basis was introduced by RBI. So after understanding that how banks adopted digital payments, how the regulatory system included digital payments in the FinTech framework, now we understand that what are the reasons for growth of digital payments in India. One of the most important reasons for growth of digital payments in India is the government policy and the push for the digital economy. As we all know that the Digital India campaign was created with the vision of a less cash economy. Initiatives such as Jan Dhan Yojana, Aadhaar biometric identity and demonetization accelerated this digital adoption. Not only that, the direct benefit transfer of various subsidies and the support mechanisms given by the government to its citizens also encouraged beneficiaries to receive money digitally. The second reason for the growth of digital payments is the technological innovations by NPCI. As we have just seen in the milestones or in the timeline of the evolution of digital payments in India, that so many digital payment methods like NEFT, NPC, IMPS, UPI, they have Rupee cards, they all have been innovated by NPCI. So the Unified Payment Interface or UPI, which was launched in 2016, has been the single biggest driver of digital payments in India. Not only this, other platforms like AEPS, that is Aadhaar Enabled Payment System, Bharat Bill Pay, FASTag, they are also the technological innovations which are driving digital payments. UPI's real-time, interoperable and zero-cost model has encouraged massive adoption and has become a case study for various nations of the world as to how digital payments can be taken to the masses. The third reason for the growth of digital payments in India is the fintech ecosystem. We have already understood in the previous lecture that which are the stakeholders in fintech ecosystem. Now in India, various fintech startups like Paytm, PhonePe, BharatPay built user-friendly apps. QR code acceptance infrastructure lowered barriers for small merchants, wherein they did not have to have any machines for swiping the physical cards. They had just to paste their QR codes, and these QR codes were scanned by the customers to make them the payment. So this QR-based acceptance infrastructure lowered the barriers, particularly the cost barriers for the small merchants. So even a very small street vendor today has a QR code through which we can make a digital payment. Another reason for the growth of digital payments, not only digital payments, but the fintech ecosystem as such, is the smartphone and the internet penetration in India. Affordable data, particularly post-2016 geo-evolution, and low-cost smartphones expanded reach to rural and the urban India. So those cities, those villages or the population in those villages who could not be connected through internet easily, or because for them the internet was expensive, a cheap availability of data and also low-cost smartphones made it accessible and easy for them to use the digital payments. Now this is again a timeline which we are talking about in terms of digital payments in India. But in this diagram as you see, or in this figure as you see, I have tried to divide the enablers or the growth factors behind digital payments in three subheads. The green represents the consumer digitization and reach. So any factor which is associated with consumer digitization and reach is given in green. Blue represents government interventions for digitization. So those factors which were initiated by the government for digitalization are highlighted in blue, and red is the evolution of digital finance. So if you see from 2007 to 9, if we go to the bottommost ladder, in between this area, smartphone adoption, which was a consumer reach or consumer digitization, was a reason for the growth of digital payments in India. Mobile banking, which was launched through the government interventions, was a government initiative. And then Aadhaar biometric identity, which is a fintech evolution or evolution of digital finance, is given in red. Similarly, if we go from 2011 to 2014, the 4G network release and the adoption of such in the mobile phones, not only in the smartphones, but also in the feature phones, which made the data faster. So consumer reach was made possible through this. Then in this time, we had a lot of government interventions for digitalization, like the entry of payment fintechs, entry of lending fintechs, and entry of MSME fintechs. Thereafter, if you see from 2015 to 2018, as we have already seen, Jio launched the cheapest data plans, so which led a lot of people to have an access to internet through their phones. Then, launch of UPI in 2016, shift of digital payments due to demonetization, where people shifted from hard cash to online modes of payment. And then open banking regulation was also a government initiative which put an impetus in the adoption of digital payments in India. If we talk from 2019 to 2023, scaling on UPI and digital credit, particularly pre-COVID, and thereafter there was a certain, because digital lending or during lockdown, there was a pause in the economic activity. Thereafter, after COVID, there was a rapid rebound in the credit and e-commerce. Small ticket credit, BNPL for e-commerce, and UPI scale becoming mainstream were a major highlights of this era. Apart from that, the digital lending guidelines have been issued, because of which new digital lending apps or fintech startups are coming into this field. So this, learners, will give you a fair idea that the whole fintech ecosystem in India is responsible for the situation or for the growth of digital payments or the high penetration of digital payments in India as we see today. Now, this is again a very interesting 4-quadrant diagram, which I have taken from the Indian Payment Handbook 2024-29 by PricewaterhouseCoopers. What does it do? It is dividing the quadrant on the basis of growth on the horizontal axis and the usage on the vertical axis. So, if you see the horizontal axis, you have low growth and high growth. On the vertical axis, we talk about usage, that is low usage and high usage. So, the payment instruments which are available for digital payments have been mapped depending on their growth and usage and adoption. So, if you see the lowermost quadrant, which is talking about low growth and low usage, we are seeing ATMs, debit cards, point of sale. They are in the area, or they are in the quadrant where they are seeing low growth as well as low usage. Because of UPI particularly, what has happened is that people have started using less of cash, so they don't need to go to ATMs. Similarly, debit cards swiping is used less these days. On the other hand, if we see what are the instruments which are very high growth sector, but still they have a low usage. So this is the area which is an upcoming area. That is, the growth is there, but the adoption is still low. These are the prepaid instruments like let us say foreign exchange prepaid cards or FASTag prepaid instruments and BBPS, which is Bharat Bill Pay System. So this is the area, or these are the payment instruments where the growth is high, but still adoption rate is less. So probably in years to come, we will see more funding in these areas. If we go to the uppermost quadrant, where we see high growth and high usage, this is something which is naturally coming, that UPI is a payment mechanism where the growth is the highest and usage also remains the highest. So this is just giving you an overview that all the payment instruments somewhere are performing in a particular area. What needs to be identified by the fintechs particularly is that in which area they are operating, where innovation is rising, so that the growth also rises and the usage also rises. Now, as we have just seen this, UPI dominance is a very natural understanding, because day to day that is what we see. We ourselves have adopted that and people around us have also adopted that. So, UPI has hit a record of 18.39 billion transactions till July 2025. Not only this, it is also the world's #1 real payment system. And it handles more than 640 million transactions every day. Not only this, it is also operational in 7 countries of the world. So there are many countries of the world where you can go and pay money, purchase money through UPI. Now, as we have just seen in the evolution, the growth of digital payments to a large extent has been attributable to National Payment Corporation of India, which we also have called as NPCI. So let us have a look as to what is NPCI and what does it do. So NPCI, or National Payments Corporation of India, is the umbrella organization for operating retail payments and settlement systems in India. It was founded in 2008 with the support of RBI and Indian Banks Association. It is not a government body, but it is formed like a not-profit organization, and it has been founded under the support of RBI and the Indian Banks Association. Its role is to create a robust, safe, and inclusive digital payment infrastructure. So, by innovating, by using technology, and also creating regulatory frameworks, NPCI is creating a robust, safe, and inclusive digital payment infrastructure. Again, if we see the functions of NPCI, NPCI operates several significant payment systems under the Payment and Settlement Systems Act 2007. Now, these are some of the payment systems which NPCI is operating. I will discuss all of them one by one. One is the National Financial Switch, which is NFS. What is NFS? NFS connects large. It's a switch which connects all the ATMs in the country. So the switch which is connecting ATMs across the country is maintained by NPCI, and it is called as the National Financial Switch. Another important payment system which has been developed by NPCI is the Immediate Payment System, which we also call as IMPS. This enables real-time retail payments in all the situations where we do not have, where the UPI cannot be done because the value of transaction may be more, or because maybe the mobile number is not seeded with the UPI. Another important function is the formation of NACH. NACH is National Automated Clearing House. Earlier, it used to be ECS, as we used to call. So, whenever anyone takes a loan, and when we have to make the repayment of the loan, and we have to give the mandate to the bank that my EMI should be deducted from my account, earlier people used to give post-dated checks to the banks, or ECS mandate was given. Electronic Clearing System mandate was given. Now, NACH has been formed by NPCI, which facilitates this bulk paperless payment. That is called as NACH. Then, another important achievement of NPCI is Aadhaar-enabled payment system, which enhances accessibility through Aadhaar. By using the Aadhaar credentials, the payment system is enabled, and all this system is maintained by NPCI. Then is the affiliation of RuPay cards. RuPay cards, as we all know, is an answer to the Visa and the MasterCard. It is totally an indigenous homegrown brand. So RuPay card, which regulates, what does it do? It regulates co-branded credit card affiliations also. Now, after understanding that what role does NPCI perform or why it was set up, let us have a look at the achievements of NPCI. NPCI is the body which has made India the world leader in digital payments volume. Not only this, NPCI ensures financial inclusion by extending services to rural and urban areas. As we have just seen that some of the products like Aadhaar-enabled payment system, UPI, are extending financial inclusion to the smaller areas of the country also, where physical bank branches were not there, where ATMs could not be installed. Then how do these people have an access to the bank? NPCI is doing it through extending these payment services to this marginalized population as well. NPCI has to be credited for creating homegrown digital payment alternatives like RuPay and UPI, which has reduced dependence on foreign networks. It also enhanced government service delivery via DBT and welfare schemes, because whatever money is getting transferred to the beneficiaries of other welfare schemes, it is done via DBT, and that direct benefit transfer or that payment for those direct benefit transfer is enabled only through the NPCI. Not only this, NPCI's activities are not only limited to India. It has promoted global collaboration. For example, UPI is now linked with Singapore's Pay Now. It is also linked in UAE, Nepal, and is being piloted in France. So, a UPI, which is a totally homegrown brand for making digital payments, is now going global, making it easier for Indian traveling abroad to make payments through their phones only. But NPCI also faces certain challenges. Let us have a look at those challenges. First challenge it faces is in terms of the system scalability. As we have just seen that there are billions of transactions which are taking place. So with billions of transactions monthly, uptime and efficiency are very critical. NPCI has to see that since it is talking about increased adoption of digital payments, this infrastructure should be such that it can scale and it can support such big volume of transactions. Cybersecurity, which is very omnipresent across the fintech sector, is also a challenge which is faced by NPCI. NPCI has to see that how the digital payment system should be protected against fraud, phishing, and hacking attempts. Another challenge which we saw in the digital payments scenario was the sustainability of fintechs. NPCI also faces this challenge, how to make these fintechs sustainable, because there is a zero merchant discount rates. That is, merchants do not get any discount on the transaction or any commission on the transaction when it is being made through digital payments. Similarly, UPI also transactions are free. No one is charged anything for that. No intermediary is charged anything for that. So it affects the payment companies' revenue models. Therefore, for how long, how many companies can sustain and how should they sustain is a challenge before NPCI. Of course, it is facing competition and it needs to stay ahead of the global fintech giants, as we have seen that most of our credit cards or debit cards, they are issued through Visa or MasterCard. It is only the public sector banks which are now issuing the RuPay card. So how can we make this adoption of RuPay cards more high? How can we increase the adoption of these RuPay debit and credit cards remains a challenge for NPCI. Otherwise, the global fintech giants will take it over. Then global expansion. It still adapting of UPI and RuPay for international acceptance still requires complex negotiations. There are many countries of the world where still the RuPay cards are not accepted. It is only the global giants whose cards are accepted. So for NPCI, the challenges remain not only at the domestic level, but also how it should be made, how the whole ecosystem or how the digital payments for the merchants and the payment companies should be made profitable, how it should be made globally acceptable is what NPCI should be working on. Now, since we have been talking about NPCI and we are saying that it is the one which has innovated one of the few of the most acceptable and the most remarkable digital payment systems, let me do a small example study for you for both IMPS, that is Immediate Payment System, and UPI. Now, IMPS was launched by NPCI in 2010 and it is a real-time interbank payment system that is available 24/7, 365 days. Prior to it, it was not that in India we did not have any electronic payment system. We had RTGS. We also had NEFT, that is National Electronic Fund Transfer, and RTGS is real-time gross settlement. So, if we were transferring money digitally, NEFT and RTGS was available. However, the lacuna was that NEFT was not available 24/7 and RTGS was to be used for a high value transaction. For low value transactions, RTGS could not be used. So, it was this IMPS was the result of RBI's vision to launch a mobile first platform that is available 24/7 and 365 days for real-time fund transfer. That is, the funds could be transferred at real time. Over time, IMPS became the backbone infrastructure for any real-time retail transfers in India. That is, the money could be transferred in real time from one person to another person at the click of a mouse or on your mobile only using IMPS. And you will be surprised to know this IMPS was developed in a period of 6 to 7 months only. Now, when we talk about UPI, it was introduced in 2016, but it was built on the top of the IMPS infrastructure, but it had enhanced features in terms of usability, interoperability, and scaling. Now, UPI, as we all know, is again a 24/7, 365-day real-time fund transfer system, but it links many bank accounts or multiple bank accounts into a single mobile platform. Unlike IMPS, where we could link one account with one bank account with only one bank account, in this particular UPI, what we are saying is that operability was more. Many bank accounts could together be tagged to one UPI or into a single mobile application. Therefore, it facilitated fund routing and merchant payments very easily, and all this was done using a virtual address. Now, as we know, UPI supports both P2P transfers and person-to-merchant transfer. That is, if I want to pay my friend, I can do through UPI. I can also make purchases on a grocery store using UPI. So, both P2P transfer, that is person-to-person or peer-to-peer transfers are possible through UPI, and person-to-merchant transactions are also possible through UPI. And how it is done? It will either done through the payment through QR codes or through UPI ID. Now, UPI has a very strong regulatory backing from RBI, which includes zero charges. That is, there is no merchant discount rate and there is no fee to users for many transactions. BHIM app. BHIM app is an overlay service developed by NPCI, which acts as an interface for accessing the UPI service. Now, when we talk about UPI, banks play a very important role in it. They play a dual role in it in terms of, one, they are the payment service provider role, that is PSP role, payment service provider role. What do they do in this role? They are performing the customer onboarding, which includes giving them or creating a UPI ID for them, and device building for authentication. And these banks also provide the front-end app. So, in the form of payment service provider, if I want to create a UPI ID, this is done through my bank, and that is what we call as customer onboarding in UPI. And also, it does the device binding for the authentication. In the terms of bank, the banks play a role in UPI for performing debit and credit transactions. Remitting bank also issues and stores UPI PIN set by the customer. So, as a banker, whatever UPI transactions are being done by the customer, so it is doing the debit and credit for that, and also it is issuing and storing the UPI PIN which is set by the customer. So this is a small, a success story of UPI and IMPS. UPI, for that matter, was developed in a period of 9 months. Now, this is one statistics which I am showing you, by which I have taken from NPCI website for August 2025. Now, as you can see, IMPS has 969 member banks, 477 million transactions of 5 lakh, almost 6 lakh crore rupees were done in this month. When we go to UPI, UPI has 688 member banks with almost 20,000 million transactions of 24 lakh crore rupees have been completed. Of course, it is UPI which is now taking a momentum instead of IMPS for the reasons we have already discussed. Now, let me just revise what we have understood in today's lecture. We have talked about that what are the drivers for the growth of digital payments in India, and we had said government push like Digital India, Aadhaar and Jan Dhan is one driver. NPCI's innovation in terms of UPI, BBPS, FASTag is another innovation, and the cheap data and the fintech apps from the fintech startups are the other drivers for this system. If we talk about the status of digital payments in India, UPI as we have said, is the world's largest real-time payment system. More than 18 billion, now it is 20 billion transactions, and is expanding globally in the various parts of the world. NPCI, which is the umbrella body for UPI, RuPay and other types of digital payments, is a body which was made under the supervision or by joining the hands of RBI and the IBA, that is the Bankers Association. It has been the front runner in innovating various digital payments mechanisms, and it has also been very successful in getting financial inclusion and interoperability of the digital payments. However, challenges in the digital payments are still being faced by NPCI. One is, of course, cybersecurity and fraud risks. Then, sustainability of the payment companies, because there is zero merchant discount rates. UPI payments are free up to a particular limit. So, how are they going to remain sustainable is a challenge. How we innovate so that they remain sustainable is a challenge. And then, there is still, even though the adoption rate of digital payments in India is very high, we still see that there is a rural-urban digital divide. There is still the adoption in the rural areas or in the semi-urban areas is still low if we leave aside the UPI. But when we talk about other types of payment mechanism, they still remain very low. So, I'm sure learners, you must have understood and appreciated the role which the various agencies in India are performing for the growth of digital payments. So, thank you very much and happy learning.